All right, and welcome back to Inside Baseball Play of the Day. And in this week's market shenanigans, inflation cools off and investor optimism is sky high. Keep it locked in right here. Okay, so we took a look at the inflation numbers that came out Thursday morning, and the consumer price index was expected to rise 0.6% in October and 7.9% to 8% from a year ago. Now, the new data shows an increase of 0.4% in October and a year-over-year increase of 7.7%. So this was what investors wanted to see. Stock futures shot up, and as of this recording, the Nasdaq is up 6%, with the S&P and Dow up more than 3%. Now, this bodes well for all the positions that my readers are holding, but we have to take these numbers with a grain of salt because it seems like a bit of an overreaction from Wall Street. And the numbers are good, but they aren't great. And it doesn't mean that consumers will feel the effects of less inflation in the near term, but it's certainly enough to push volume higher in the markets and get some positive momentum back. So once we see prices stabilize and we see signs that the labor market is cooling, that's when the market should really take off. For now, the Fed is still expected to raise rates until they reach 5% next year. But remember, the Fed wants inflation at 2%. And until inflation hovers around 4.4%, the market volatility will continue. Today's numbers do show that it's a risk-on environment, so investors willing to take on the risk are plowing into the market. We could see some wild movement this week. And if you want to see what me and my readers are buying to try and profit off these latest inflation numbers, just sign up for a risk-free trial to my newsletter below. That's it for this week. Now play me out, boys.